I'm David Bodemer, the Editorial Director for National Real Estate Investor. We're here at ICSC Recon 2012, and I'm here with Fred Schmidt, the President and COO of Coldwell Banker Commercial. And we're here to, well, so what have you seen from the show so far?
Thank you, David. Glad to be here and glad to be with the National Real Estate Investor Group and everything else. We're actually seeing a tremendous amount of activity at the show. It's actually going back to the old days before the downturn and everything else. So we're very encouraged by that. And I mean, nationally, all of us, there's a lot of optimism out there, and a lot of just the volume of people at the show is very encouraging for the retail sector in general.
So I know that you guys have particular strength in secondary and tertiary markets. So what are you seeing happening there right now?
Sure, we're actually in all three, primary, secondary, and tertiary. Have over 150 locations in the secondary markets overall. We're actually seeing across the board gradual decreasing in vacancy, increasing in demand. Retail has probably been the one that's suffered the longest, and so it's gradually coming out. According to Reese reports, I think they had the first downturn.
Right.
From 11% to 10.9%. Not a trend line yet by any means, but with virtually no new construction, the market stabilizing is probably the best way to look at it.
And you're seeing that across
We're seeing that across the board. I mean, it's certainly some areas it's where you had the overbuilding and new construction, so a little bit less, but in the mature markets, such as like the northeastern area, Southern California, interestingly enough, where you didn't have as much overbuilding and things like that, they're starting to tighten up a little more than we've seen elsewhere. And the central business districts also.
Okay. So we're almost at like the halfway point of 2012. What does your deal volume look like so far?
We're actually trending what we're seeing in the overall market. Retail, we have a big footprint in the southeastern and southwestern United States, in retail in particular, throughout the country, but those areas. So we're mirroring the overall general economy. We're starting to see the gradual increases and decreases. We're not in the business of forecasting, but we're generally seeing that trend line mirroring what we're seeing nationally overall.
Right. And rest of the year, do you think that's going to be all right as well?
Don't have a crystal ball with regard to that, but I mean, given the general, assuming that oil remains at the rates that it is now or going down, the sovereign debt crisis, all those macroeconomic factors don't impact. In particular, oil, though, because if oil hits $125 a barrel, right, discretionary consumer spending tends to stop. So assuming those things, I think will be cautious optimism, slow and steady is probably the watchword for the retail sector in general.
Are there any particular sectors or markets that are hotter than others right now?
I'd say in terms of sectors, what we're seeing right now is we just had a couple presentations around this morning, literally a couple hours ago, is the ethnic niche plays. Okay. So the Asian community, Hispanic community, Korean, lifestyle type things. And we're seeing national retailers, generic ones, starting to look into the ethnic niche plays, which they heretofore haven't really looked at with regard to that.
And with that, so does that favor particular parts of the country where there's concentrations of populations? Absolutely,
and the demographics within those areas. Another area too is the ex-urban core with the baby boomers aging and things like that, not in the CBD, center city, but not in the suburbs. That area, I call it the donut, the area in between the two. You'll see the mixed use development, the components of residential and commercial and retail, and the shopping and discretionary spending for those areas too. Consequently, you were seeing a decentralization with a lot of the retailers going to smaller footprints and smaller stores. Walmart's going the documented thing about Walmart going to smaller stores, right. Best Buy doing the same thing. So seeing that going from a centralized to more of a decentralized node. Part of that's the urban planning, and part of it's the fuel prices and things, getting closer to the client.
Sure. Conversely, are there things that are not as hot right now?
I think the question is some of the big box retailer areas, the category killers, some of those big boxes, I think that follows that trend line with regard to decentralizing. So I don't know if that's a trend per se or what we're seeing overall, but it's something to be watched and everything else. And of course, the systemic shift with the internet. People buying things through the web, and then what impact does it have on bricks and mortar, and what is that ratio overall? The math isn't quite there yet, but it definitely has an impact, and that's across the board in the United States.
What about on the investment sales side? What kind of activity are you seeing from buyers, and what are they looking to get?
We're actually seeing in commercial real estate in general, and in retail in particular, if it's well located, good credit-worthy tenants. The cap rates are anywhere from, again, secondary and tertiary markets are 6 to 8 to 9 or 10%.
Okay.
And that's 6, 7, 800 basis points over the 10-year T-bill. So just like people are buying stocks, bonds, commodities, in your real estate portfolio, commercial real estate should have a place. And the retail sector, it's all local, again, creditworthiness and cash flowing, but it's a great time to be buying. So our investment activity is up overall. That and the availability, assuming there's available financing and capital, interest rates are at all-time lows. So a lot of pent-up demand and people looking to invest in that sector.
And are the lenders willing to finance some deals like that?
It's still the liquidity and the capital that's out there is still a little bit suspect, but we're seeing it more in the local and the community and regional banks.
Okay.
But some of it is getting back to the old days of doing business, all cash buyers or seller finance deals and things like that also. So it's gradually getting liquidity back into the market.
Okay. And any final thoughts in terms of the rest of the show, looking ahead beyond that?
I have to say, you came into the show not knowing what it would be like and everything, given the past couple of years, and very, very optimistic with regard to just the volume of people that are going through here, the deal velocity and everything else. So if that's an indicator, it's a pretty good one right now.
Great.
So cautious optimism, I guess, is the watchword.
Okay. Well, thank you so much for coming by.
Thank you, David. Great to be here.
And thank you for watching this video, and continue to watch our reports from ICSC 2012.